So very excited today to receive the CEO of Reown,
Thank you
Jess.
for having me.
Thanks for coming in the office in Paris. I'm excited as we with Kiln and in general, we believe that on-chain is the new online and the financial system is being rebuilt on blockchain, but not only. Every use cases, every transactional use cases might happen on blockchains in the future, and I think what Reown and Wallet Connect are doing is making billions of potential users in the future using blockchains and moving on chain. So thanks for coming on the podcast. And yeah, can you please introduce yourself as well as how do you fall into the crypto rabbit hole in the first place?
Yeah, so thank you very much for having me. I'm very excited to be here in this really beautiful space. Um, I guess my original background before I got into crypto, I was in traditional finance and banking, private equity, but I had studied at university economics, and in particular, kind of got hooked on the history of monetary systems niche. But what that meant was when I first learned about Bitcoin in 2013, I was just like instantly, I could sort of pattern match this like evolution of a new monetary system. We had this anti-inflationary digital currency that had limited fixed supply. That was kind of like a mirror to some of the monetary systems we'd seen in the past. So that's what got me into crypto in the first place. And a couple of years later, I was, over traditional finance and moved straight into kind of crypto full time at the end of 2015. Did a couple of different things. I wrote a master's thesis on the applications of blockchain for the art world, looking at like how we could use this technology to track the provenance of valuable assets, and all sorts of other stuff.
Still access this thesis or
It is online somewhere. I'll send you the link.
get it, or can you send me the link?
I'll tweet.
Okay,
I will.
Then so okay,
We could tweet it. And so I sort of did a mixture of things, and then immediately prior to joining Wallet Connect, I was at checkout.com, which is a payments company, traditional payments company, but where we were providing fiat payments for a lot of crypto companies. So if as an end user, you went onto an exchange and you bought crypto with a debit card, for example, that was the kind of technology that we were providing. And we built some of the first kind of institutional payments products with crypto. So we were the first merchant acquired to be able to settle our merchants using stablecoin, and in 2022. So we were sort of starting to build a lot more of the crypto product payment stuff, as well as just having crypto companies as customers. And in 2023, I got introduced to Pedro Gomez, who is the founder of Wallet Connect. And as somebody who has tried to build decentralized applications, used Wallet Connect infinitely, but never really thought about like what was going on behind the scenes, when I met him, I was really inspired by obviously what he had already built, and also the potential that the network and the customer base that we had kind of held. So was very excited to join the team back in end of 2023. And it's been a very fun 18 months since then.
Yeah, and you've done tremendous work since you're in charge. And coming back to your checkout experience, it seems that first of all, the checkout crypto business seems to be very substantial these days. And it seems there's a natural evolution from you moving to like an off-chain to on-chain business, to completely on-chain business, which is what Wallet Connect and Reown is today. Can you talk a little bit about this and also, yeah, how did you get convinced by Pedro? Right, it's like what was the pitch? Was it that you were a user there? Was it something else that kind of triggered the move?
I guess, even before checkout, when I was first excited about crypto, I could see the potential that this technology was going to underpin the entire internet. And I still really believe that that's the case, that the whole of Web 2 will Web 3ify in some way. So that will be about how we move money and value. I think it will be about how we think about our identity and our data, how we share data with people. partly because it's just a much more efficient technology, partly because it's much more robust and resilient in a world where our institutions are sometimes not serving people well. I think the right to self-custody is really important. And so all of these things kind of really came together for me with Wallet Connect, which, ultimately was started to solve the first big user experience challenge, where we had mobile wallets and desktop applications. How do we connect them? And it's that QR code that solves the problem that most people think of when they think about Wallet Connect. And I guess the other part that really convinced me was no end of user experience challenges to solve. I still think as an industry, there is a huge chasm of user experience from Web 2, where we're all very used to downloading an app, onboarding seamlessly, it's safe, it's easy, no problem, to Web 3, where actually we've still got very meaningful challenges from a user experience perspective. Loads of different clicks, needing to know what seed phrase I've got, needing to know, hiding it under my desk. Needing to know what native gas token I need in order to be able to do a transaction, having to think about what chain my asset is on. There's just an endless list of things that make using crypto really, really hard. And at Reown and the work that we do with Wallet Connect, our mission is really about making crypto usable, because that's the only way I think that we get this adopted at scale.
Right. And I guess you already mentioned it, you already shared it, but is that the long-term vision for the Wallet Connect / Reown ecosystem, is to onboard the next billion of users and make this blockchain interaction that is historically quite complex, very easy?
Yeah, I think we don't... it's funny, this phrase that we always use as the industry, like we're going to onboard the next billion users.
Yeah.
And I actually I often challenge us on that, because I think the idea of onboarding means we need to teach people, we need to make them come to where we are. And I think that the reality is we have to take this technology to where they are. And that's really how we get this adopted, is by meeting people with what their expectations are. And at Reown, we also don't build consumer products. We're not consumer facing. And so we phrase our mission as building the UX platform for Web3, because what we're really all about is delivering tooling to developers so that they can create great experiences. If you're building an app, the last thing that you should worry about is how all this wallet connectivity works. You want to focus on building an amazing game or the best staking platform or whatever that is. And this should just be something that is available to you and creates a great experience. Similarly, if you're building a wallet, there's all sorts of things that you've got to focus on, and that connectivity into applications is probably not where you want to really focus your time. And so by building sort of these toolkits that we can deliver to app developers and wallet developers, I think we can take away some of those user experience challenges and let people focus on what they want to do, which is onboarding the next billion people.
Exactly. So you provide the tools, meet users where they are, so that developers and companies get onboard these billion users. And you're saying you're not a consumer-driven company, or at least you're first building for developers that will then access consumers via the app. But you have access to millions of end users that somehow know what Wallet Connect is, and some now use Wallet Connect UX every day. So can you talk about these million users? How many are there? Are we talking, how many millions are we talking about? And also, where are they located? What do you see there, right?
So we have, on the network, we've got about 700 different wallets across different chains and ecosystems. We provide somewhere in the region of 30 million connections a month, across
impressive
5 to 7 unique 0x addresses each month. So often those addresses are making multiple connections during the month. From a geographic perspective, I have a dashboard, or I have a world map, and I can see what's going on. And I find this really interesting. We see a lot of usage in Southeast Asia. a lot in Nigeria. India is also very big. Latin America is very big. The US is obviously up there as well. Europe's probably one of the quieter places, actually. But we see this very interesting kind of distribution. My new favorite map that I looked at and we built this week shows me the distribution between iOS and Android users on a global basis. So that was kind of interesting too, to see where there's a placing.
Can you share the breakdown for iPhone if you can't just
Yeah, no, I think I'll probably tweet this as well. But definitely like more Android in Africa,
right?
More Android in Latin America and Southeast Asia. Probably what you might expect, to be honest, if you think about like the price point of Apple phones versus Android phones. So yeah, very kind of an interesting distribution to look at.
And do you feel in Southeast Asia, Latam, and Africa, you mentioned Nigeria, stablecoin is one of the major use case you see going through the usage and the million of monthly active users you have?
I mean, I think stablecoins has been one of the biggest topics for us over the last 12 months. I think it's really migrated away from just being a store of value for traders and what you move in and out of if you're a crypto trader, to being something that actually everyday users want to hold and be able to use, whether that's for payments or because they want access to a currency that is maybe better protected from inflation than their own, and they haven't been able to do that before. So I definitely think stablecoins has been a huge topic. I think especially in countries where there's less developed financial infrastructure, stablecoins just have really accelerated. And I think that's where we do see a lot of activity in Latin America, in Africa, is because the existing financial system is not serving the people well enough. And so they are looking for alternatives. So we're definitely seeing a lot of stablecoin growth there, but also in the rest of the world as well. I think it continues to be probably one of the hottest topics out there.
And before we come back to stablecoin and the payment markets, because that's definitely an avenue where you're very knowledgeable about, and I'm sure part of the vision of what you're going to bring to the ecosystem in the next 5 to 10 years. You mentioned there are 700 wallets in the network. Do you see, which is quite a lot if you think about it? I'm sure there's, and I know because we work with some of these wallets, there's concentration of volume in a few of them. But do you think we'll have thousands of wallets in the future? Do you think there will be more consolidation there? How do you see this landscape of wallets evolving?
It's an interesting one because even today, when we look at the top 10 or 20, that list changes very frequently. Who's in the top 10 in 1 week might change in the second week or the third week. So there's definitely a lot of evolution, I think, to happen in the wallet space. I think that today we serve a very wide range of wallets. We've got hardware wallets, we have mobile wallets, we work with more institutional wallets like Fireblocks, and some fully kind of qualified regulated custodian wallets that use the Wallet Connect network. So it's a really sort of broad range. And my expectation is that we'll see some of those areas increase. So particularly custodians will increase. We did a survey, and I've just sort of seen the results. So we did a survey a few weeks ago of users. Hardware wallets, people are much more interested in hardware wallets than they were even when we did the survey this time last year. Last year, I think about 6% of people said they wanted to be able to use hardware. This year, it was like 11%. So we're going to see that sort of...
And do you think that this is because... as the acts in the ecosystem are growing, and with the Bybit act being the largest one and the last one, do you feel that they believe in hardware even much more than before?
I think it's a combination of security and wanting to have that, and as users become more sophisticated in crypto, they move from maybe just playing around with a small number, small amount of funds that they can hold on a mobile wallet to actually thinking, oh, I want something more substantial here. I think hardware wallet experience is also changing and getting better as well. So it becomes more intuitive and easy to use a hardware wallet than maybe it was before. So that's definitely increasing. I think that overall in the wallet space, when I think about myself, I want to use different wallets for different things. I don't, I use my hardware wallet for high value things, but it's a pain if I want to just buy coffee with it. So even as an individual user, most users, and again, this was from the survey, I think the average user who's been in crypto for more than a year has 5 wallets that they're using on a reasonably regular basis, and used 5 different wallets in the last 3 months, I think was how we phrased the question. And for me, that shows that there is space for many different wallets. And I think it's for wallets to kind of think about what their niche is and who they really want to serve. Because not all wallets should look the same. There will be wallets out there where, they are specifically targeting more experienced traders who just want to do swaps and things in the wallet. But there are also users who think about this, again, not for trading, but because they just want to hold stable coins and pay for goods and services at the shop. And what they want from a wallet is going to be different. So my expectation is actually that we'll continue to see a lot of different wallets in existence, and maybe even a bit more diversity in terms of those wallets. So it's not just, similar but with a different brand, but actually more thoughtful, maybe user experiences and tailoring to the end customer needs.
Interesting. The fragmentation as the needs on these blockchain continue to evolve.
Yeah.
Will exist, and with different wallets, different needs, different tech, different user experience. And is it for with the Wallet Connect and Reown ecosystem to be the key was this wallet fragmentation and UX fragmentation as you have like as many wallets and different UX that is happening?
Yeah, I think ultimately if you exist in a multi-wallet, multi-app, multi-chain world, which we do, there are inherent user experience trade-offs that you're going to make. And I think that the role that we've played historically and that the network will continue to play moving forward is to just try to reduce that complexity if you're building. So if you're building a wallet, you want your user to be able to use every application. In the same way that you wouldn't have a bank say, oh, Laszlo, you can only spend at these shops, but you can't spend at these shops. That just doesn't make any sense. It's why we have these big open payment networks like Visa and MasterCard, which just make it really easy to use everywhere. Similarly, if you're an app, you don't want to say, I only want to actually serve MetaMask customers. Why would you do that? Why would you reduce the pool of users that you have? And so with the SDKs that we have available, it means that as an app, you can just serve everyone. You don't even need to think about it. You don't need to build multiple different integrations with different wallets or pick which wallets you want to work with. You can just say, I want to be able to work with every user that has access to the Wallet Connect network.
And we can testify on that because it's Kiln. We have a dashboard where our institutional customers can access to monitor their stake through different validators and different custodians. But definitely a part of the easiness of the experiences because we use the Wallet Connect, the SDK, and they can connect to their favorite wallets and then stake.
Yeah.
And can you also come back to the rebranding that you've I mean, maybe we should have started with this, but the rebranding that you went through last year and the now separation between the foundation and the company that is building the software so that the developers can integrate it. Can you come back to this rebranding?
Yeah, so the origin story of this is goes back a long way. When Pedro first built Wallet Connect, the server was sitting in his bedroom. And so every Wallet Connect message...
Not the case anymore, right?
It's not the case Not the case anymore. No, we changed it last week. So for a period of time, every message that was going through through Wallet Connect network, and it's encrypted, so it's not like people in Bedroom were reading it, but it still was reliant on this very centralized server. And a lot of the feedback that we got from partners who are completely reliant on us for that connectivity was that they really wanted to be able to run an instance of Wallet Connect on their own. And so at the beginning of last year, we really started the process. We changed over the database, re-architected the database that supports the Wallet Connect network so that we could decentralize it. And we started adding third-party node operators. Kiln are running one of those. We have 16 different node operators today. And a lot of partners who wanted to be able to run their own node for the network. Not that we had ever had an issue running it on our own, but I think for resilience and just for future growth, people really wanted to know that this as a core service for Web3 was going to be there forever and be very resilient. So Wallet Connect...
And just to pause on that, because if you are, for example, a large custodian, or if you are a large financial institution, a bank, you might want to run your own infrastructure because you want to have higher latency, more control on the transaction that you pass through the network and how you use the Wallet Connect ecosystem in the first place.
Exactly. And so we want to give that like resilience and strength and choice to people. And so last year was really a journey of kind of taking the Wallet Connect network, decentralizing it from a technological perspective, and then also starting to decentralize it from a governance perspective too. So we created the Wallet Connect Foundation, which is sort of stewarding the network. They're really coordinating a lot of the governance processes, how we think about technical upgrades to the network, for example. And we decided that should stay as Wallet Connect. It's, despite not being a consumer brand, has a lot of consumer brand recognition. I think kind of in the same...
C2B, right? It's like people...
Yeah, right. Exactly. I think it's, if you... One analogy I use is sometimes like the card schemes. We as consumers aren't a direct customer of Visa or MasterCard, but we all know what Visa or MasterCard means, and we have trust in what those brands are. I think it's the same for Wallet Connect, as like an end consumer isn't a customer for us, but they know when they click the Wallet Connect button that they can securely connect their wallet into an application. And so the Wallet Connect network is now kind of on this path to decentralization and eventually permissionlessness, so that everybody can run their own node if they want to. And then at the company level, our focus, as well as building the network over the last year or so, has really been on making sure that the developer experience is excellent, and that our WalletKit and AppKit SDKs that serve the wallets and the apps respectively are resilient, secure, and really working very well. And so we decided to kind of separate those two brands so that Reown, and the inspiration came from the idea that we want to like take back the ownership of the internet from the big giants and put it back in the hands of every individual. So we created Reown really as this kind of UX development company, so that we can work more on a B2B level. So we have these two different components that work very symbiotically, but where we've got the Wallet Connect network and then Reown on the company side.
That's a great mission to give back the ownership of the internet to the people. The Wallet Kit is for one wallet to be part of the 700 network, 700 wallets in the network, and the App Kit is for any app to essentially list this 700 wallets that any users being already on this wallet can interact with the app, right?
Exactly. So that's the sort of the core functionality of each of the SDKs. And then we also have a bunch of other features in them. So in both, we have some security features that allow the app to verify their domain so that the wallet knows that it's interacting with a verified, not a malicious domain, for example. So some security features. In AppKit, we have features like on-ramps, swaps, email embedded wallets, so that as an app developer, you can create a very thorough and customizable onboarding flow. So yes, somebody might be bringing their own wallet, but they also might not have a wallet yet. So you might want to allow them to create one using a Google login, for example. They want to be able to buy the cryptocurrency or swap into a different token, all without leaving your app interface, reducing the friction, making it just easier for end users. So within each of these SDKs, there's, as well as the network access, there are other features that are designed to improve user experience as well.
Yeah, that's right. You can come with any or known pre-existing wallets and then create a passkey, for example, and or through your passkey, create a wallet, or through your Google or Apple connection, create a wallet.
Exactly.
And in one click, being in 3 clicks, maybe being in web.
Yeah, probably 2. We're trying to get it down to 1.
I want to come back to stablecoins and the payment markets, because that's a market that you know very well. It seems that even announced on Twitter that Stripe and has integrated the app kits to give their on-chain users that are already using stablecoin a way to store it through the wallet that they use already. Can you deep dive into maybe that integration specifically, and how other payments companies might use the Wallet Connect ecosystem in the future, and why?
Yeah, so I think with Stripe and with many other crypto companies, with many other payments companies, in the same way that they don't want to say, oh, we'll only accept Visa but not MasterCard, they now realize that actually there are a lot of people who want to spend crypto, but they need to do that in an easy way. If you go back a couple of years and you wanted to spend crypto or stable coins on like an e-commerce site, there was just no option. Maybe there were some sites that did accept crypto. Sometimes you had to copy and paste an address to do it, and it was kind of clunky. So with Stripe, they launched their crypto pay-ins product, and it uses the Wallet Connect network so that irrespective of which wallet I have, I can connect my wallet to the Stripe checkout flow and pay with crypto. And we're seeing actually a lot of payments companies want to be able to do that. It means that they can access a different consumer base. For the payments companies, crypto is obviously a much lower fee model than some of the other payment methods out there. So we're definitely seeing appetite there. We're seeing growth in the interest in payouts, which is like my personal favorite stablecoin use case. And the reason why is because I think if I'm trying to buy something, even if I prefer to use crypto, I'd probably have a payment card that I can use, for example. And the fees don't typically impact me as an end user. I mean, they do indirectly because it affects the price of the good, but actually it's sort of the same for me whether I'm buying the t-shirt with crypto or with my Visa card. With payouts, it's a very different situation. So imagine you've got a creator platform, people all over the world are participating in it, and they're earning $100. When they want to take that $100 out, it goes through this long and expensive correspondent banking network, and that $100, by the time it ends up in the bank account of the creator in Africa or Latin America, is more like $70-something. Like, it's really, really meaningful for these creators, and it's not just creators; it's anyone. And it might take 5-10 days, whatever, and you can't do it on a weekend, you can't do it on a bank holiday. And with crypto, we have this like really elegant solution that means that as a creator on a platform, I can get that $100 to be 99.9 USDC, and then I do a last mile off ramp. If I need to, maybe I don't even need to, I can use that USDC in real life. But we just cut those fees from $20+ down to cents, really. And I think that for me makes a much bigger impact than like I could just pay with crypto. It actually it reduces the like rent that's being extracted from people. So I'm very excited about the payouts use case as well.
And that's super interesting. And you coming from a Web2 payment company, and as these people are moving on chain with stablecoins, and the fees are not 30%. What you mentioned, if you take like so many intermediaries, and maybe like 3 to 6 or 8%, if you take one consumer or B2B payment company, what is their future business model, you think? If in a world where all of these flow are moving on chain?
Like, I think like payments companies and the payment rails that we have today provide more than just the value movement. They provide fraud protection. They provide consumer protection. They allow you as a consumer to challenge if you're incorrectly charged and get that money back potentially from the scheme or from your bank. So there is a lot of value that's created in the payment system today. It's not just about extracting large fees. So I think that payments companies are going to continue to have a role to play in terms of...
It doesn't exist on chain today, right?
It doesn't exist on chain today. I mean, you're starting to see it. There are a couple of companies that look at like fraud and risk for on-chain transactions, but I think that's an industry that's waiting to evolve, especially from the consumer protection side. So I think there's a role for existing payments companies to continue to play there and to continue to aggregate, because whilst I think we're going to see a big percentage of things move on chain, probably still going to have the existing payment methods around for a very long time. And as a payments company, what your role is there to do is to simplify that as well. So I think that there continues to be an important role for payments companies. Do you think it will impact their business model? Because as you say, the fees are going to go down quite meaningfully. But I think increasingly payments companies are monetizing much less on the actual payments anyway, and much more on the value-added services that they're providing. So I think they'll continue to be able to do that. But yeah, it's definitely going to be a changing world for them.
And it could be saving accounts, as like payment company aren't focusing on the flow, only on the flow anymore, but maybe just on the assets that are sitting in a wallet, or more banking services in general. I guess there will be convergence of like what a payment company does and what banking services are today.
Yes, I think there'll be convergence on that. I think identity is another one where like financial services and identity are very tightly combined. I think that will continue to evolve. So I don't think we'll see payments companies going out of business for sure, but I think that they will need to evolve to adopt this kind of new market.
Right. And I guess it's an opportunity for them, but also for Reown and the Wallet Connect ecosystem to bank or give financial services to the unbanked, right? Do you think about this net new users or not even using financial services and might onboarding your ecosystem in the future?
I certainly think that's the case. I mean, I think we've seen that trend not just strictly in crypto, but there's all these other technological developments that mean that that's much easier. So mobile internet, the availability of Starlink now is going to be global very easily. So the ability to have a mobile phone at a very low price. All of these things make it much easier for somebody who even 5 years ago would have found it very difficult to access financial infrastructure. When you then layer crypto on top of it, you bring this like global access. So as we were saying earlier, there's a lot of people who live in places where even the financial infrastructure that they can access might not be that robust. Either because it's super high inflationary currency or because the banks that exist are not particularly stable, or they charge insanely high rates for doing things for people who can't afford it. So what you do by layering the crypto system onto this like mobile and internet access is they actually you now have much more choice. You can hold a fraction of a US dollar if that's meaningful to you, and have exposure to different assets that you might not be able to have through your existing financial system as well. And I think that those two things combined are really empowering. And as we start to see that evolve, as we start to see merchants being able to then accept that currency directly, I think I don't want to be too idealistic about it, because the idea that crypto solves everything, we know isn't the case. But I do think that it has just add some crypto, it's fine. But I do think it has the ability to really over the next 5-10 years be quite transformational for some of those communities.
And I agree. I would like to come back on the chain you support as well. Can you remind how many chains do you support today, and how do you think of new chains? Of course, it's the role of your ecosystem to abstract fragmentation, and these different chains are creating more fragmentation. I think you did it very well, but do you think there will be more chain fragmentation in the future, more chains in general? And how do you think of adding new chains in your ecosystem?
So for our tech stack, there's sort of two different layers that chains come into play. At the network level, it's fully chain agnostic. So you can use Wallet Connect across any different ecosystem. On the app kit side specifically, there's a little bit more work for us to support chains on a thorough basis. So to give them the on-ramps, the swaps, the embedded wallets, the RPC access, all of this sort of stuff, we have to do a bit more work. And so today we have what I call like that full feature support for Bitcoin, EVM, and Solana. But Wallet Connect is very widely used in many other different ecosystems, like Hedera and really, really all over the cosmos, all over the place. So when we think about kind of where we're going to reinvest and put more resources for new chains, what we want to look at is the developer activity, the investment activity, the potential for that chain to grow, and for us to have meaningful customers and where there's demand for it. And we, that growing more multi-chain is a big part of my strategy. I really think it's very important because I do think we're going to live in a multi-chain world. We see that today that, different chains are great at different things. What's really fast and, may not be right for you. You want really fast and really easy for a gaming environment, for example, but that might not necessarily be important for a different type of application that you're building. And so I think we're going to see, more chain specialization coming in. We're going to need to be able to support more chains. As you say, it creates by solving one problem, we always do this in crypto, we solve one problem and we create another out of it. And the problem that we create out of this is this liquidity fragmentation and users needing to think about whether I've got USDC on Solana or USDC on Base before I can spend it. And that is what we want to help solve as well.
Was the late century as well, right? Like that's where the Wallet Connect network can come into play.
Exactly. So we have we're just launching our kind of chain abstraction product. So we have a few of our top wallets launching with that this quarter. And the way that I kind of try to describe that is we want to make it easy for a user to use their assets irrespective of which chain you're on. So you go onto an e-commerce site and the merchant wants to charge you 20 USDC on Solana, but you've got 10 USDC on Arbitrum and 10 USDC on Optimism in your wallet. And today you're going to have to go and swap and bridge and do all of that in order to make that as a flow. With this chain abstraction product that we're launching, that becomes one click. Your wallet will say, do you want to use these two assets? You click yes. In the back end, we manage this kind of flow, the swaps, the bridges, so that we can deliver 20 USDC to the app, but you as an end user don't need to do the swapping and the bridging. And so for me, again, this is a way that we can make the user experience better while still giving the developer the choice they want about which chain they want to operate on from an app perspective. Having said all that, I think that there are a lot of chains. I don't strictly think we need all of them. But
Thousands of chains.
Thousands of them. But at the same time, it's hard to tell what we need. And maybe the most popular chain in 10 years' time is one that doesn't exist today. And I think that this is still a really, really early technology. So having that experimentation and the ability to try new things is really important at the moment. But I think probably over the long term, that's going to get consolidated a bit.
Right. I agree, right? In the fact that I think there will be specific chains for specific use case. Is it the L2 on Ethereum? Is it even an L2 on Solana? Or hybrid chains, private C chains, but then at some point you won't see hundreds of new layer ones because what the Solana and the Ethereum and the Sui of the world are fixing is already fixing a lot of problems that blockchains are entailed to fix in the first place.
Yeah.
I want to maybe before in very last question opening what you get excited about crypto tech with the world in general in this troubled time. I want to make sure we speak about the monetization because you have millions of indirect users. You also have 700 wallets on the network, and monetization is an important aspect in Web3, in crypto in general. As Kiln, we try to onboard and work with our partners so that they can monetize the yield part of the ecosystem, but there's also the transactional part. How do you think yourself about monetization?
So I think Wallet Connect as the network has been free since it was built in 2018. And we very much think of it as a public good for the ecosystem. It's why we've decentralized it. It's why we're launching the Wallet Connect token so that becomes the currency and the economic unit for the network that is used then to reward the node operators and the wallets and everybody who's providing critical infrastructure to the network. So the tokenization of the Wallet Connect network is sort of how we think about the value of the Wallet Connect network. And it doesn't necessarily mean that we're going to switch on all the fees today and things like that, because I think there's also again, thinking about the long term, and I want to build this into a business that is still here or a network that is still here in 100 years, not just in 5 years. We want to make sure that it's robust, that people can use it, that it's easy. And so we really think about this as the public good element of what we build. Having said that, then, as you say, we need to make sure that we can continue to develop this and make this into a sustainable business. We have fantastic investors, but people don't typically want to just continue to fund free things forever. And so we are starting to think about how we monetize at the Reown level with the SDKs that we provide. And typically that monetization, well, the model of how we think about that is around the value-added services that we can provide. So it's not just about saying, you're going to have to start paying for every connection. It's saying, okay, you're using the Wallet Connect network for free. What else can we provide you on top of that? So is that the on-ramp services and the swaps or the embedded wallets? Is it really interesting data that we can serve you that helps you understand who your users are, where they are? Are they using the Apple iPhone or the Android?
Are they in Argentina or Nigeria?
Exactly. And so we're starting to explore these other kind of products and services that we can bundle together that create a lot more value for people so that they want to pay for it. And we've got a few kind of enterprise clients who are doing that. And we're starting to launch some more of those features this year. So I think, for me, I don't want to optimize for revenue about this year. I think that's a bit short term. So I think it's about creating a steady, sustainable kind of business and making sure that we're really adding value rather than trying to extract it.
Right. I agree. Too many companies have to be trying to extract it. And I would be very excited to pay for knowing the breakdown between Android and iPhone.
I'll send you a free taster for it later.
It's like, just send me a free if you can. Yeah, I want to know, like, what are you excited about these days? Tech, crypto, things in general.
I continuously get excited to see like innovation in the crypto space, people using this technology in different ways that we maybe haven't seen before. So I love it when apps contact us that are using Wallet Connect, sometimes because they need some support or sometimes they just tell us about it. There's an app that I met the other day where they use geolocation to kind of record when a photograph is taken. So it's proof of like when that was taken, it gets sent straight to the blockchain. So you can think about kind of misreporting in war zones, for example, like big problem. How do you trust this media? So it's just like a really cool and very unique use case. I see 3 or 4 of these every week that I'm like, oh, I've never heard of that before. And so that innovation really excites me. I would be remiss, obviously, not to mention AI, because that's the hot topic that everyone is talking about.
And maybe before we go into AI, just on innovation, I would say, just going to WalletCon that you organize on a regular basis, and see the talk there and the attendees and the apps that are building on the Wallet Connect network. It's just insanely optimistic for the ecosystem, and it's just very refreshing to see all of these builders that you've gathered through your network.
Thank you. It's one of my favorite. We do it twice a year, and it's one of my favorite days because the level of excitement is high, but not in a like, oh, just market prices are high and everyone's got crazed about crypto. It's just people who are building, and seeing people talk about the work that they're doing, like gives me endless inspiration, for what we build. So definitely WalletCon is a big highlight for me. Yeah.
You mentioned about AI as well.
Yes, of course. Everyone's talking about AI, something that we're talking about a lot internally as well. Few ways that obviously it can and is already impacting our business. I think, how we think about using AI internally is important for productivity. What tooling can we use? And we're starting to see a lot more adoption internally of using AI in the work that we do. AI agents having their own crypto wallets is obviously another one. And some of what we're doing around smart sessions, which basically it's like policies and permissions that allow an agent to do things on behalf of your wallet. It's really cool innovation. So I'll just be able to say, let my agent spend up to $100 a month in this application, and I don't need to keep clicking in my wallet to approve every transaction, for example. So there's cool innovation that's taking place there. And then how developers are building, obviously. Our own internal developers are building with tools like Cursor. But that means that if you're building a crypto app today, you're probably also using AI. And so we're thinking at the moment about how we make sure that our docs are really AI friendly, and that people building using AI tooling can build with our products as well. So that's obviously, another very exciting topic.
Yeah, I'd love to see where I talk to my agents and ask him, hey, I'm in the mountains and in Chamonix, and I want to rent these keys for the morning. I have my USDC on the wallet. Can you please rent the skis? Take the subscription for the ski pass, and do that automatically with AI.
Exactly. I think it'll happen.
Thanks, Jess, for being on the podcast, and I hope you thrilled with what you're doing with Reown and Wallet Connect. I mean, it's you need our encouragements. I think you pretty much there, and I hope to have you again. Thanks.
Thank you very much for having me, and thanks for the continued partnership with Kiln.